Hey, you guys, this is Nicole from Pimp Your Taxes. So, I just wanted to make a quick video, and I'm going to challenge myself to keep it to 5 minutes or less, but to show you guys an easy way to figure out your tax situation. How much you're going to be taxed, if you're going to owe taxes, or if you're getting a refund. So, let's look at it. Basically, you want to find out your gross income, subtract your standard deduction, and that gives you your taxable income. All right, so the standard deduction. The standard deduction, this is where you want to start. So it depends on your filing status. So if you're single or married filing separately, your standard deduction is $12,950. If you're married filing jointly or a qualified surviving spouse, your standard deduction is $25,900. And if you're considered head of household, your standard deduction is $19,400. You're considered head of household if you have a dependent that lives with you more than 6 months out of the year, and if you provide more than 50% of the support to take care of the house. All right, so you figure out your standard deduction and your gross income. Your gross income is all income. It could be from wages from a job. It could be from self-employment, unemployment, retirement income, interest and dividends. You adding up all of your gross income for the year, and you are going to subtract your standard deduction. So let's look at this example for a single filer, someone whose filing status is single. For example, let's say they made $18,000 for the year. They're single, they have no dependents, they provide their own support, and they do not support anyone else. So their standard deduction, according to the chart we looked at earlier, is $12,950. So when you subtract that from their gross income, that leaves $5,050 of taxable income. This is not the amount of tax, but this is the amount of income that they are taxed on. So now we need to figure out how much are you taxed on that income. So I don't have it on the screen here, but the tax table, the marginal tax rates, is one way to figure out how much you're taxed. So the tax rates, there are 7 tax rates: 10%, 12%, 15%, 22%, 25%, 35%, 30%. I don't want to get mixed up, and I'm sounding like that Mike Epps joke. 35, 37. But there are 7 tax rates. The lowest is 10% for incomes up to $10,275 or less. You pay the maximum when your income gets above $539,000, then you're paying 37% income tax rate. But in our example, their taxable income was $5,050. So they're in the lowest tax bracket, which is 10%. So 10% of $5,050 is $505. That's one way to figure out your tax rate. The other way, which is also more exact, would be to use the 2022 tax tables. You would find your income on the tax table, look across to your filing status, and that gives you how much you're taxed on that income. I don't have that in this slideshow. It was in my, I've recorded this so many times, but this is the final one. So unfortunately, I don't have that tax table in this slideshow, but trust me, that is how you figure out your tax on your income. All right, so that example was for a single filer. Now, this example is for someone who is filing as head of household. All right, so we're taking the same amount of income. Let's say they made $18,000 in gross income for the year, And this is just a general example, you guys. I'm not doing itemized deductions. I'm not going into above the line deductions. This is just kind of straightforward, basic, and standard, and that's why we're just going with the standard deduction. This is kind of what most people get. So I'm using these numbers because it applies to most of us. So for someone who's filing as head of household, let's say they made $18,000 for the year. As head of household, their standard deduction is $19,400. So when we subtract that from our gross income, it would be a negative number, but we can only reduce our income to zero. Okay, so, and that is the goal. That is goal number one, is to reduce our income to zero so we have no taxable income. Okay, that's goal number one. So for the head of household filer, we've reached goal number one. We brought their income down to no taxable income, meaning they have no tax on their income, no tax to pay. So goal number two is to get a refund. So now you need to see if you qualify for a refund. So how do you get a refund? A couple ways to get a refund. You can get a refund of taxes withheld. So if you work, if you're a W-2 employee and you get taxes taken out of your paycheck every pay period, you don't know how much to get taken out. You fill out your W-4 when you get your job, and you put your deductions and your exemptions in, and that tells your employer how much taxes to take out of your check. Okay, most people play it safe and they put less deductions and less exemptions than they qualify for, so they get more taxes taken out, meaning more taxes withheld, and sometimes they get too much taken out. So at the end of the year or at tax time, they get a refund for their overpayment. So that is taxes withheld. You can also get a refund by getting a refundable tax credit. So there are non-refundable tax credits and refundable tax credits. So let's look at the refundable tax credit. There's the earned income credit, and that's mainly for lower incomes and for families under $50,000 a year. This year is about, you want to stay under $53,000. After $53,000, you don't even qualify for the earned income credit at all. The child tax credit is for people who have kids under 17 years old. They get the child tax credit. And we have the American Opportunity Credit, and that's for people who have paid for higher education, college, trade school, things like that. They have school expenses. They can get a refund back for some of those expenses that they paid. So let's look at the earned income credit. The maximum credit is $6,935. That's if you have 3 kids. And so the way that this credit works is the more you make, number one, it phases out after 53,000. 3 kids and 53,000, you get no earned income credit. But it even goes more in depth than that because okay, so the credits, if you have no children, you can get $560 earned income credit. But you can't make over $16,000 in income, or else you don't qualify for the earned income credit. See what I mean? If you have 1 child, you can make up to, I believe, about, I don't have the table in front of me. I think it was about 40,000 you can make before the credit phases out. So the credit phases out at a maximum amount of income. So the more income you make with this credit, the lower the credit goes, if that makes sense. So in our example, the person who made $18,000 in income, credit if they had 3 kids, okay? Now, let's say they made $30,000 in income. Well, then their earned income credit comes down. It gets lower. As their income goes up, their credit gets lower. So I hope I explained that clear. All right, the child tax credit. The child tax credit last year was killing them. It was banging. It was giving you $3,000 per kid. Your kid could be 17 years old, up to 17 years old. It was a beautiful credit. People was getting checks for like $15,000, $20,000 tax refunds. And last year, you didn't even have to have any income to qualify for the full credit. This year, it's back to the regular deal. So the child tax credit, the max credit is $2,000, but the refundable portion is only $1,500. And most of the time, this credit, you don't get the max refundable portion. You usually don't. So just to let you know, that's how this credit works. There's a worksheet to figure it out. It's too many decimals and percents and all of that to go into. But more than likely, if you get the max earned income credit, you're not going to get the max on the child tax credit. So just to give you an idea. So let's just say for that person, in our example, they made $18,000. They got 3 kids, 3 dependents, which are their kids under 17. So they qualify for the full earned income credit, $6,935, and they have 3 kids under 17, each of them getting $1,500 on the child tax credit. And this is just an estimate because, like I said, you're not going to get the max. You're not going to get $1,500. You might get $900 per kid. But this is my estimate, and I'm making it easy for all of us. So let's say you get the full $1,500 per kid, then your earned income credit plus your child tax credit gives you a refund of $11,435. That is an overestimate. Let me tell you right now, because like I said, your child tax credit will not be as large. You won't get the max. Because if you get the max child tax credit, you won't get the max earned income credit. It's the way that it goes. But this is just to give you an easy way, and I hope I made it easy, to figure out your credits. And then the American Opportunity Credit gives you, if you get 25% of your expenses up to $10,000. So let's say you had expenses of $10,000, the whole $10,000. 25% of that would be $2,500. So you would qualify for a $2,500 credit, but only $1,000 of that credit is refundable. So they use the non-refundable portion to lower your income tax down to 0, and then you get the refundable portion as a credit. All right, so I know that was more than 5 minutes. I hope it wasn't too confusing. I hope I made it clear. I hope it made it easier to understand for you to kind of figure out your tax, figure out how much money you made in 2022, figure out your standard deduction, subtract your standard deduction. That gives you your taxable income. Hopefully your taxable income is 0. And if it is 0, then add on your refundable credits to see what your refund would be. All right, thanks, guys. I'll go more into detail about anything in particular. If you have questions about any of this, leave a question in the comments, and I'll make another video. Thanks. Bye.